Solid Trades, Ali here. In this video, by the time you finish this video, you're going to be learning how to manage your emotions while you're in a trade, how to not fear when you're in a losing trade, and how to be able to stick to your stop losses, and how to deal with FOMO, how to deal with revenge trading. And the tips I'm going to be talking about in this video, if you apply tomorrow, you're going to see huge difference in your trading. All right, so let's get into it. And before I get into it, please make sure to subscribe to the channel, guys. I post videos constantly with amazing content, and if you like it, please also like this video and share it. All right, so let's get into it. So top 5 trading psychology lessons that I have learned over the course of my 4 years of trading career, and still going, knock on wood. And I'm really excited to share, because these are really gem info that I have learned from my trading mentors and from my experience. All right, so let's get into it. First most important is the mental capital. We all have financial capital. We all know that we have to have money in order to be able to trade. However, it's equally important to have a mental capital as well. If you have money, but if I have money and if I'm crazy and I'm stupid, I'm gonna lose all of it, right? But in trading, it goes way more than that. So basically, mental capital is equally important as financial capital. You have to overcome your mental hurdles to become consistently profitable. Even experienced and successful traders have ended their career and blew up their accounts, okay, because of mental breakdowns. So how to preserve it? So the first, for me, how to preserve my mental capital is always cut my losses when I'm wrong rather than holding, because this helps me focus on winning trades more than losing trades and keep me in the game mentally. If I'm losing right now in a trade, and instead of focusing on other good opportunities, I keep looking and keep managing my losing trade, and when it goes down, I add more and I don't know when it's going to come up. I hope my financial capital is going to go down, my account is going to go down, but at the same time, I'll be so mentally drained because of seeing the red losses, and then seeing all the other trades go away and go past me where I don't take my position, because I'm stuck in a losing position, is going to drain my mental energy. Okay, and what that does is that it only sets you up for losing trades in shape of over trading or revenge trading, because now you've lost so much money. So now, instead of you're already mentally drained, you're not going to be able to take all the perfect setups because they're probably gone because you missed it. Okay, so now you're going to enter late, you're going to chase, you're going to revenge trade, you're going to lose more, and it's just going to be it's going to be basically a downward spiral. Okay, and that's how it starts. So for me, it's always cut my losses small. Okay, now everybody's different, so your homework is to find out what drains your mental energy, okay, during the trading session, and then come up with solutions and implement them in your next trading session. And that's how you improve. Make sure you're always up to your optimized mental level, okay? And that's the best time you're going to be trading, and that's the best time you're going to be taking advantage of your trades. All right, lesson number 1, mental capital is equally important as financial capital. Second, if you miss the stock and it goes up without you, don't get discouraged or curse yourself. I see a lot of people, or I used to do it a lot too. Sometimes I still do. When the stock goes up a lot, I'm like, oh god damn it, I was watching it and I missed it, right? Don't do that. If you do that, you're gonna miss even bigger moves, okay? Because you're gonna be in a negative spiral again. You're gonna be thinking negatively and you'll be cursing yourself. Instead, get excited, okay? Because your thesis came true. You thought it was gonna go up and it did. Okay, so now look for an entry, because if a stock is truly strong, it will give you another entry. So for example, NEO here, NEO is just being absolutely on a rip these days, right? So that's why I brought this example. So here, NEO, clearly you can see here, the market opens, okay, and then you see here how it popped up, it came down, and then boom, look at this huge move up, right? Now let's say if you're watching it in the morning, you just start going up, you're like, oh my god, I didn't get in, I should have gotten here when it was right down here at $28. Now it's all the way up to 30, 32 or 30, 31, right? And then you're gonna be like, oh my god, I don't know what to do now anymore. Now you're probably pissed, or you're probably discouraged, right? Because you missed the move, right? However, if you didn't get discouraged and got excited instead and started looking for entries, look, it gave an amazing opportunity. It broke this resistance from at here, and then it went up, and then it came down and made this nice flag pattern, okay? And boom, there was your entry. You see how you missed this move, right? But look, here's your another entry, and then that's when the actually bigger move happened, right? So if you have only, got discouraged, right, you would have missed this whole move. So if you miss the stock, but the stock is truly strong, it will give you another chance. Don't get FOMO, okay? Now, that brings me to a difference between a good trader and a bad trader. This is one of my favorite. Basically, a good trader, so if you want to know if you're a good trader or a bad trader, a good trader thinks how much money he's going to lose if he's wrong on the trade. Okay, that's what a good trader thinks. But a bad trader thinks how much he's going to make if he's right. He's always thinking about his gains. Okay, so what happens is that, I mean, you kind of counterproductive, right? I mean, yeah, you want to look for the gains because you're here in the game for the money. But really, a good trader is just a good risk manager. Okay, a good trader just manages his risk and let his edge play out. So a good trader will be prepared if the stock goes against him, and he will be able to cut loss quickly, right? And he will still be able to keep his mental energy, okay, because he's out of a bad trade quickly, while the bad trader may not cut away the loss, thinking of the potential gains instead, right? And he didn't think that what he would do if it doesn't work in his favor, and he might end up holding the trade or averaging down, which is like a big sin in the day trade world, right? Or any trading. If you hold your position, investing is totally different. I'm talking about trading, all right? It's totally two different topics. So a good trader will be able to cut his loss quick, look for a good opportunity, and make all his money back and more, while a bad trader will be stuck in a losing trade, all right? So if you want to know if you're a good trader or bad trader, think what you're thinking before entering into a trade. All right, that leads me to the next psychology lesson, which is the correct position size. Because position size is so important. It doesn't matter if I'm sure it happened to you so many times where you got into a trade and you were really positive and very confident that it's gonna go up, and it doesn't. Okay, and since you were so confident that it was going to go up, you end up getting more size, or you buy a lot of shares and it goes down, and then you end up taking a huge loss, and eventually the stock does go the right way that you thought, and you're stuck with a loss. That's the most, I mean, it hurts me. It happens to me sometimes still, and that's the worst thing that could happen. I mean, to me, that's when I get hurt. I'm okay if the stock goes against me and I take a loss, but it hurts the most when I take a loss and the stock goes up my way, which I thought it would. So the best way would be to adjust your position size. So for example, if you are okay to lose $200 in a trade, okay? So if you lose $200, okay. But if you lose like 500, 600, I mean, that's way too much, right? So for example, if you think the stock is gonna go from $10 to 15, right? But you're okay to lose only $200, and your risk is about 8, so if you think it's going to go down to 8, I'm going to get out. So you only buy 100 shares. So if you buy at 10, if it goes to $8 and below, you get out and you lose $200 with 100 shares, right? So what happens in this case is that, let's say you bought at 10, you have 100 shares, starts to go down at $9, $8.50, and you're like, I'm going to get stopped out, but still you're not losing more than 200. You're down 150 at $8. If it's down $1, you're going to be down $100, right? So what happens is that you knew already if you were wrong, you're going to lose 200, and you're down 100 right now, so you're okay. You're in a comfortable position still, okay? But let's say if you had bought 1,000 shares instead of 200, instead of 100, and the stock starts to go down just $1, even though your stop loss is $8, right? You're going to be down $1,000, and you're going to just get, just super scared. Right? And you're gonna cut your loss, most likely get super emotional, and you want to get out, and then you know what, stock's gonna end up going to 15, and you're gonna be like, oh my god, I missed it, right? It's because, and you took $1,000 loss just because you just couldn't stay in the trade longer. So if you have a proper position size, now everybody's different. If you are okay to lose 1,000, then you can buy 1,000 shares. If you're okay to lose 100, then you can only buy 100 shares. All right, so you adjust your position size, okay, what you are comfortable with. All right, and then stay in the trade until you get stopped out. Okay, that way you will never ever be caught like a deer in a headlight. You'll always stay calm and stable, because you know you're only gonna lose what you're willing to lose. Okay, so you're always stable, and then if it gets stopped out, it's still a good trade because you stuck to your plans. Okay. Now let's say that the one dealing with a big loss, that's the how to deal with a big loss, and that's the biggest one. I mean, dealing with a big loss is one of the hardest things for traders, and they can easily become traumatized after a big loss. I have been traumatized so many times. I mean, it just hurts, right? But you always come back. But even worse, it causes you to doubt your strategies, ability to become a good trader, unable to press buy button on time when a good trade shows up eventually, right? So how to overcome this? So after a big loss, first thing you want to do is just walk away from the desk and do something to divert your mind. Okay, even call it a day, because this is the time you're the most emotional and susceptible to revenge trading and making even other bad mistakes and putting you down even further down the hole. Okay, just get out. And the next day when you come back, reduce your position size, okay, to control your emotions. And then for your next couple of trades, just trade small and make like just focus on getting green. Okay, that will bring back up your confidence. All right, and then slowly increase your size up again. Okay, and always stick to your stop loss. That's it. Once you have like few couple of good days, you're gonna be back. That's it. You forget. That's how cool. That's, I mean, it's some weird, but that's how it happens. If you lose a little bit, if you lose the money, and you have like few more good days, your confidence comes right back up. Okay. So if you just do that, focus on the next 2 days, just have small green days, you'll be back up in no time. Okay, and that's how you trade. These are my top 5 trading psychology lessons. Now, I have like lots of other trading psychology lessons. So if you want more, comment on it. I'll put a part 2. Like it if it was helpful. Guys, please subscribe for more amazing content. I'm going to be putting out this content daily, or at least a few times a week. And join the Discord chat for trading alerts, chat room, daily lessons, motivation, and much more. All right, guys, I'll put a link down below. It's free right now, so go ahead and join the chat, and we talk about these stuff daily and great profitable ideas in the chat. All right, guys, take care. Bye. Good luck.